Good morning, everybody. It's Max Convexity. How's everyone doing this morning? Let's look at these Defiance funds, see what's going on. That's all I ever do, it seems like, right? Okay, we're going to look at the long form spreadsheet today really quick. All right, this is Triple QY. These guys sold 133 put options at the 19-100 strike for $67. This is the amount of intrinsic, which is the in-the-money amount of that option. And this is the amount of extrinsic. Extrinsic is what they pay the distribution with. Intrinsic is what goes to hopefully make the NAV go up. They're going for a total of $891,000 today. They made $1.1 million yesterday, and I don't want to say what I'm thinking, but I'm just going to direct your attention to notice that everything in this month is the same color. So that's nice. And that's not the case on IWMY. The Russell fund is kind of getting beat up, but this fund is having one hell of a month. Okay. So the running earnings per share is 40 cents. We aren't even halfway through the month. That's incredible. The dividend estimate right now is 80 cents, which is nice. Yeah, it's 80 cents. Very nice. Okay. So break even on this is 19,033. So this is the way this works right here. This is the way a profit box works, in case you guys have never seen one of these in action before. Okay, so 19,050 is the strike price. So that's the max profit, right? Or I'm sorry, this is 19,050 would be NASDAQ. Okay. Gosh darn it. Okay, so what we do when I'm doing one of these is I go right to the strike price first. Oh, it's 19,100. My bad. Okay. That's max profit right there. See, the market closed a little bit under that yesterday. It may not look like much, but the distance between 19,074 and 19,100 is the upside that they're attempting to capture. It's a very small amount. Okay, so now the intrinsic amount is the in-the-money amount. So that's the green part of the box, green for intrinsic, for greed or wealth or whatever. But the extrinsic part of the box, the profit box, is represented by the break-even line. And that was at 19,033 because it was a 66, 67 point. It went for that. So this part of the box represents the out of the money amount. And it's all option traders call that time value or theta. And that's the part right there that pays the distribution. Yellow part pays the distribution. Green part is supposed to protect the NAV. All right. So now let's look back to the spreadsheet. So now that you guys have seen how a profit box works, let's just look at the other funds right here. So IWMY, they sold 791 options at the 2035 level for $8.50. Now, look at this. The premium these guys have been getting just this month, it was 12, then 10, then 10, then 12, then 10, then 18, then 12. It's on a low for the month today. Not a lot of premium in the market today. So the market makers aren't expecting a lot of excitement today, evidently. I mean, as indicated by the price of the option. Okay, these guys are going for $672,000 total profit, which is 6 cents a share. If they're able to get it, it would bring them to negative 7 cents a share on the month. The distribution estimate is going to be $0.75. Okay, so It's not bad. But it's actually really low, I should say. I thought it is bad. That's very bad. Look at all the other distributions for this ETF: $1, $1.29, $1.10. So I bet it'll go up. But this has been a rough month for this fund. Not only has it not been bringing in very much extrinsic and paying a very high dividend, it's had a lot of trading losses as well. All right, JEPY. These guys sold the 53.65 strike. They sold it 237 times for almost $11. Break evens 53.54.20. These guys are going for just over $250,000, and it would bring them to 32 cents a share positive on the month. The dividend estimate is 69 cents. Now, for these guys, that's pretty good, actually. Maybe even I'd say about average, or I'd say higher than average. Good distribution estimate right now, but it's just all based on this extrinsic right here. That's what it's all based on. Okay, so now we have USOY. I fixed the estimate on this one. This one had a wrong number yesterday. I'm sorry about that, but this is a good estimate, $1.27. Or I checked the math works. I didn't have any, corrupt data in there. Let's just say that. Okay, so these guys are selling puts also on the USO. They sold the 74 strike put for just more than $1. So break even 72.92. See what these guys are doing for the month. On the month, these guys are up 21 cents, assuming that calculation's correct, and it's kind of looking like it may not be. Anyway, I'll check the math on that, but let's now look at the charts and see how the market traded overnight. All right, here's a 24-hour chart of NASDAQ futures. Boy, look at this, straight sideways. It blew up Wednesday of last week. And since then, just straight garbage. This right here is perfect market behavior for option sellers, because it won't establish a trend. All right, so that's 24-hour NASDAQ. Here's 24-hour S&P. Oh, that's SPX. That's cash S&P, which doesn't trade at night. What is going on? Okay. Yeah, same story on the 24-hour trading. Ever since last Wednesday has just been grind fest. Here's 24-hour chart of Russell 2000. It's a little weaker than the other two. These are 30-minute bars. All right, let's check Bitcoin because it has so much to do with everything nowadays. Oh, geez. I was worried about this little formation up here, and it kind of looks like it tried to take out the prior top and then got rejected. And in any event, so many stocks nowadays are tied to Bitcoin. If Bitcoin goes down, it's hard to get the market to go up. All right, so let's go to Tesla. I'm going to kind of zoom out today to get kind of a perspective on their strategy. So the yellow boxes, those are the strike prices of the options they sold. You can see they usually sell the strike prices above where the market is. Sometimes the market will move up like right here and here and go through the strike prices, but then they just put the strike prices further out. But when the market goes straight sideways, they don't have to move the strike prices as much. Like I say, option sellers like that. Tesla also has a negative and inverse fund called, it's not Tesla. There's an inverse yield max fund. It's an inverse Tesla fund called Crash. Anyway, Crash just started, but its profit boxes or its strike prices are represented by the red boxes. Now they haven't had a strike price get run through yet. And of course, some people get upset when a strike price gets blown out, but it's a great problem to have. It means you've reached max profit. There's an opportunity loss, sometimes an opportunity cost that's frustrating, but it's the grand scheme of things, that's better than the alternative. The alternative is you sell a covered call and your stock drops 5%, and you sell the covered call for a quarter point or something. That's what usually happens. So you're down 4.5 or 4 3/4. That's the real problem with covered calls, not when the strike gets blown out. That's a good first world problem to have. Okay, so now let's look at NVIDIA. This one's the same thing. This one has a yield fund called NVD, which is NVDY, one of the hottest funds of the year. Came public at 20 a year ago, $20. It's already paid. I wonder if I still have that up. I don't think I do. It's already paid. Look at this. This is insane. Came public at 20, but they're showing 28. I guess it didn't come public. Oh, I'm sorry. That's NVIDIA. NVIDIA came public at 20 a year and 1 month ago. It's already paid $16.19 of dividends. And that's without the effects of compounding. I mean, you've got about 80% of your money back at this point. This one's the exception and not the rule, but this is an example of what happens when covered calls go right. And I would direct your attention to notice the main thing that went right about this is they chose the right underlying. So basically, this is like anything else in the stock market. It's just one underlying you choose. And if you can't choose good underlines, that's why you have to be, diverse. And so hopefully you'll have some good underlines in your mixes, in your allocations, I should say. Anyway, I thought that was interesting. But so now look at these guys. These guys, I can't show you all of their strikes because of the split. I lost my strikes. Well, let's look at another. This one's MicroStrategies, which is MSTR. Now you can see right here, the market started rallying and they started writing options out of the money, and their strikes kept getting blown out. So they kept writing them further out of the money. Then the market kept going through them. They kept writing further out of the money until they get here, until they wrote them at 2,100. And then they wrote one at 2,400 or something. Then as the market comes down, they just do the reverse process. It's just a little money machine. Just a little money machine, but you're still invested in the market and you're still subject to, the stock dropping. All right. What else can we look at? What about Coinbase? This is a good proxy for Bitcoin also. Now look how far out of the money they wrote their strike this week. I think they actually wrote that at the end of last week. They rolled last Friday. These two strikes got blown out by a lot. And so then they wrote this one, and it was, I want to say at the time they wrote it, it's like 20% or 15% out of the money or something. It's crazy. And it represents the premium that thing brought in, represents a 73.84% dividend. If that was the only option they sold all month, the distribution would be about a 73% annualized rate. So yeah, so that's really good, of course. All right, guys, I'll be back later. Here's the 5-minute max spreadsheet. I usually check this one during the day because it's faster. But in any event, this will start updating with live prices during the day, and I'll come back on usually around the middle of the day, and we'll see what's going on with everything. All right. I appreciate it. You guys have a good day.